Hello and welcome back. So in this recording we're going to look at the consequences of incorporation, and what we're really thinking about is those administrative requirements that are imposed on a company. Now the reason for this, just to put it in perspective, is a kind of quid pro quo. So if you are able as a shareholder in a company to benefit from limited liability, it's only fair that anyone who might be extending credit to your company is able to find out as much information as possible to see whether that company is actually credit worthy. So, what happens if you don't comply with these rules, first of all? Well, it's a fine for the company and possibly for the relevant officer of the company. That could be the company secretary if you have one, but also directors. And in an extreme case, and it would be pretty extreme, imprisonment. Now, what do we have to do? Well, we have to keep company records. Now, the usual place to keep these is at the registered office, although you can keep them at an alternative location, a solicitor's office, accountant's office, something like that, so long as you've notified Companies House of that alternative address. That way, if anybody wants to see the records, they can go to the alternative address and they can go there and demand to see the records. Now, what do you need to keep? This list is quite long. Register of members, so a list of the shareholders and how many shares they own and their certificate numbers. A register of the directors and also their addresses, but just note that residential addresses is not available for public information. It's what we call protected information. And that's just to protect the directors and their families from harassment in their home address. Relatively new addition to this information is a register of people with significant control. Now, this is about being able to identify those people who may not have shares in the company, but are capable of influencing decisions, and they must now be disclosed. Copies of the director's service contracts and indemnity agreements. If you're a shareholder and you're thinking of removing a director, you need to understand what the contractual consequences of that might be. For instance, you could remove a director as an officer of the company, but he may still have a right to claim for wrongful dismissal and get significant compensation for the company. Copies of resolutions, minutes, director's statement, auditor's report, register of charges. Now, remember, a charge is not a register of people you owe money to. A charge is the security that you have given for the money that you owe. And that register will identify how much you owe, who you owe it to, and which assets have been given as security for that charge. Again, if you're thinking of lending money to the company, that could be very useful information. Now, a debenture is an IOU, a loan note issued by the company. Now, companies do not have to keep a list of debenture holders. They're not like shareholders. However, a lot of companies do decide to. Of course, if that debenture is secured by a charge, it'll be on the charges register anyway. Now, anyone who is a shareholder in the company and creditors of the company can turn up at the registered office or nominated place and ask to see copies of these documents. Okay, and it should be free of charge. Other people can ask to see these documents, but you're entitled to charge them a nominal sum for the hassle of having to get your documents out and show it to them. Now, in addition to the books that the company keeps itself, the Registrar of Companies also keeps a register. Now, this is the one at Companies House. You've probably had some dealings with this at work. And that register has a number of documents. For a start off, the certificate of incorporation, the document that says this company is properly incorporated and gives those key details such as the registered number. Also, the trading certificate, if it's a PLC, any charges that have been registered, and any other documents that have been filed. For instance, your annual return or your statement of confirmation now, and copies of those special resolutions that affect the constitution of the company. Now, any person can go to Companies House and ask to see these documents. Any person has the right to inspect that register. Now, a lot of these documents are now free. For instance, you can get the latest annual accounts and so on free of charge on any company. However, if you want a more detailed report on the company, you will have to pay a small amount of money to get that. And again, don't forget there's certain information that is protected and isn't available to anybody at all to have a look at. Now, another thing that's replaced the annual statement, which companies used to file at Companies House every year, is the confirmation statement. And again, some of you might already be filing these. Now, this is delivered to Companies House every year, and it basically confirms that none of the important information about the company has changed in the last 12 months. So, for instance, the registered office or the place where the statutory books are kept, type of company, its principal activities, shares, shareholders, and again, those with significant control and those officers of the company. So if you haven't got any changes to make that year, the report will come up on screen, you log in and you just tick that everything is as it was before and file that. And of course you'll have to pay an annual fee as well to keep Companies House going. Companies are also obliged to produce accounting records and reports. Again, not a lot to add to the notes here, but we'll just have a quick look through. So what goes in these accounting records first of all? Well, the obligation is to keep adequate accounting records. And by adequate, they mean sufficient to show that the company's financial position at the end of each day. So daily entries of income and expenditure, records of assets and liabilities, and if there are details of stock and so on. Now, this should basically be your normal management accounts. Also, annual accounts. So all companies must prepare annual accounts and consolidated if they're part of a group. And the accounts have to give a true and fair view of the company's financial position, and in some cases will need to be audited. Now, those accounts will have information in the notes which support the basic accounts, the balance sheet and profit and loss. They must be signed on behalf of the directors, and for a limited company, private company, filed within 9 months of the accounting reference date. 6 months for PLC. You don't get as long because PLC is more tightly regulated. You'll need a director's report, again for each financial year, and that will give the names of the directors, principal activities, and just that statement of confirmation that they're not aware of any relevant information that hasn't been revealed to the auditors. Again, that director's report approved and signed on behalf of the directors. Director's remuneration report for a quoted company, remember, giving details of the director's remuneration. And if you need to have an audit, an auditor's report saying that the accounts have been audited in the correct manner, giving the scope of the audit, and confirming again that true and fair view of the company's affairs. The other thing the auditors will do is just give that confirmation that the director's report is consistent and ties in okay with the accounts. Now, if you're a large or a medium-sized company, and we'll come on to those meanings in a moment, then directors also have a strategic report. So this is a review of the company's business, brings into account the major risks they've faced, and increasingly, I think for most businesses, the impact of the uncertainties that they face as well. So this is to let the shareholders actually have a look at how well the directors are doing. And it's really about that director's duty we talked about earlier on, the duty to promote the success of the company. Remember those issues that directors have to consider. Now, audits. Increasingly, companies are not required to carry out an annual audit. If you're now a micro or a small company, a dormant company, if you're a non-profit making company, or a subsidiary whose parent guarantees their liabilities. But even if you've got this exemption, one of the powers of your shareholders is that a group of 10% can actually request an audit anyway. So for instance, if they're a little bit worried about the director's activities, they think he's up to no good, they might want that audit for their peace of mind. Now, I've got the definitions here. Please note these change every year. So, micro, medium-sized companies. The table shows you the definitions for micro, small and medium. And in order to comply with any one of those definitions, you must meet 2 or more of the tests. So it's possible the examiner can construct a question that asks you to decide whether someone is actually a micro, small or medium company. The main point about micro companies is that they have slightly more lenient regulation than small and medium companies. Now, I'm not going to read this to you, but the tests to do with the turnover of the company, the balance sheet figure, and of course the number of employees as well. Now, auditors. Auditors are appointed each year. Now, in a private company, an auditor is deemed to be reappointed at the AGM each year unless somebody schedules a motion to remove the auditors. But if you're a PLC, the auditors stay in position until the end of the AGM. Obviously, they have to be at the AGM to answer any questions and so on. And then they will be reappointed or replaced if necessary at that AGM. Now remember the procedure to remove an auditor, same as the procedure to remove a director, ordinary resolution on special notice. The auditor's powers are quite wide. He has a right to look at all the company's books. He has a right to attend a general meeting of the company or to call a meeting if he finds it's necessary. And it's also a criminal offence to lie to an auditor about something connected with the company and its audit. Now, final person to look at on this list is the company secretary. Now remember, a PLC has to have a company secretary. Private companies don't have to unless you've got a sole director. So he's not on his own, taking all that responsibility on his own. He needs a secretary to hold his hand. So, who can be a company secretary? Well, this is the interesting thing, actually. A company secretary has to have relevant skills. They have to show that they are either an accountant, a solicitor, or have some other company secretarial qualification, or at least relevant experience. And the secretary is an officer of the company alongside the directors. They're also an employee, so they'll have an employment contract as well, and employment rights, the same as the rest of us. And their job, basically, is to run the meetings. So their job is to call the meetings, set out the agenda, write up the minutes, circulate them to different people, and also maintain those statutory books and that annual confirmation statement. In terms of agency law, we know that directors have quite wide power to bind the company in its daily activities. But a secretary has a very limited power, and it's limited to administrative operations, arranging meetings, booking hotels for the meetings, cars to take people to the meetings. It's that kind of thing. So this authority is implied actual authority. Remember, that comes from your position in the company as an officer of the company. If a company secretary were to enter into more onerous contracts, so for instance buying land, borrowing money, things like that, things that normally a director would do, then that company secretary will not be able to bind the company. Okay, that brings us to the end of this chapter. Have a look at some questions, see what sorts of things the examiner's asking you about this chapter, and I'll see you soon for the next chapter, which is about directors and shareholders' rights.